or the broader markets? No, it hasn't. They are still sticking by with their gains, about 1.5% up in the green for the mid-cap index, so far at least. But let's bring on board then Avinnash Gorakssakar, talk about what could the one look at buying in trade right now. Avinnash, afternoon. What is the sense that you're getting about this market crash yesterday, the kind of choppiness that we're seeing right now? What are you telling your clients? Start nibbling in right away because the market is giving you a ripe opportunity? Or do you think, waiting for the dust to settle down, the poison to come out of the system is a more prudent approach right now?
No, in fact, Aisha, I think the fall from 8,300 to 7,800 was pretty sharp. And our sense is that I think this is a market where when people are fearful, I think you need to be greedy and clearly get into some stocks where, the companies are driven by large brands, have a very strong business model. So clearly, I think, leaving alone commodities, I think clearly our sense is that wherever you have a secular kind of growth story, more importantly, earnings are going to show a very strong rebound in both FY16 and 17. Clearly, I think those would be the companies to watch out for. Although overall, I think the earnings story is not yet looking very great. We might be having 8 to 10% overall earnings growth for FY16. Our sense is that this volatility on the rupee side would obviously make markets very volatile. This week being an expiry week also. So I think one has to be very cautious. I think one could deploy 20-25% of their funds, but definitely a good time to start buying now.
So since you do see value emerging right now, Avinnash, where or rather which pockets do you think the value has clearly emerged for Indian equities right now? Give us some stock ideas that you would recommend our viewers and your clients to go out there and start nibbling into or buy.
Well, I think clearly from the media space, Dish TV from the DTH, marketplace looks pretty attractive. I think we have seen this company struggling for a very long time, but once break-even has happened, the company has come back to the black. The company reported a good 54 crores profit in Q1, and in fact, this is after a very strong quarter in the previous quarter. So clearly, I think the kind of subscriber addition Dish TV is making. Our sense is that this is a very strong multi-year kind of good story, and this is definitely going to be sustained. If at all the GST also gets cleared in the special parliamentary session, our sense is that possibly profitability would get a further leg up. Our sense is over the next 12 months, you could see strong earnings recovery plus FY17 looks pretty attractive. So one could look at a target price of around 125, 130 over the next 12 months.
What's the other stock then on your radar?
From the private banking space, Aisha, we still like Axis Bank. We feel that this is the third largest private sector bank, and the kind of profitability ratios and the kind of NIMs Axis Bank enjoys in excess of 3.5 to 3.7%, plus very good stable asset quality levels. More importantly, a very strong loan book growth of around 18-19% expected. Our sense is over the next 2 years, profit after tax could grow at a compounded growth rate of around 16-17%. And the kind of price Axis Bank currently trades, it's about roughly about 2 times FY17 book value. So we believe that for a bank of this size, one could definitely expect a good re-rating. Hopefully, once the macro numbers improve, we have better GDP and better IIP numbers and more corporate capex picks up. But overall, looking at the asset quality, we feel that in the next say 12 months, one could look at a target price of around 630, 640.
Okay, Avinnash, good chatting with you as always. Thanks much for taking the time out. Watch out for the market, 7856 now in the Nifty futures, and we've already slipped into a